Nadia, that was a great overview of the GSEs and how we operate. And we're now even closer because we have a common regulator who sets all those standards. Yeah. But I'm very excited today to talk to you about two elements, condo financing and our home-ready mortgage. Okay. Not advancing? Okay. So, you know, I moved down here in 2007, right at the peak of the crisis. And for the first 7 years, we were all embroiled in foreclosure prevention. I'm sure I've met many of you at foreclosure prevention events. I'm so excited that in the past 2 years, we have seen a turn in the market and much of the tightening in the underwriting guidelines, which we put in place to try and conserve and preserve the process we have for providing loans has improved. And so in 2015, we rolled out the Home Ready Mortgage, which is intended to address some of the issues that was mentioned earlier, the question of workforce housing and the question of affordability. And more importantly, how can we provide a low down payment product that will help home buyers to purchase some of the homes which are now coming back in the market, and which in South Florida, there was reference made to the growing inventory of condo condo homes for sale. And so we want to make sure that we have products that can help you all. So on the table outside, we do have more details on this product, but basically it's a 3% down, 97% loan to value. And what I will keep stressing is that condominiums are an eligible project type for this particular loan. It's low, the pricing is good, there's lower MI on this product, and we have some income flexibilities that is helping more borrowers to purchase because we have widened the income eligibility criteria. So rental income, border income, you can get assistance from someone living outside the home to purchase the home. One of the themes we're talking about today is low down payment products. And so I know that's going to be a subject later on in the presentation, but I want you to know that for this particular product, it's a minimum of 3% down. And in fact, you can purchase it with 0% down. You can purchase a home using this product if you are able to get gifts, grants, and community seconds. And I know down here in South Florida, we have quite a few community second products which are going to be discussed later on. You can go up to 105% combined loan to value on that product. Now, all the features and flexibilities of the Home Ready product, and I just gave a brief overview of that, is available to borrowers purchasing owner-occupied single unit condo properties. But of course, this is subject to the maximum loan to value and combined loan to value ratios for Florida. And we depend on our lenders to do the necessary review and approvals for us. I'm going to go over these approvals very quickly, but what you would want to note here is that for new or newly converted condo projects, we can have up to 97%, 3% down using the Home Ready loan. And then on established projects, once a full review or the PERS review is done, then the maximum loan to value again is 97%. It's only when in cases where a limited review is done by the lender that we restrict the loan to value to 75%. My colleague from Bank of America is going to go into these in a little more details, but we have 4 review processes that lenders can use in reviewing projects for sale to Fannie Mae. The most frequent one, or the one I hear feedback from lenders most often, and realtors of course, is the Project Eligibility Review Service that we refer to as PERS. And this is available to lenders to submit new and established projects to Fannie Mae for approval. In Florida, if it's a new project, you have to use the PERS process. The lender performs the review per our selling guides, and we do have some exceptions. So, for example, if it's a manufactured home, or if it's a totally reconverted gut rehab, and if it is a new project, the lender submits it to Fannie Mae through our portal. We work with them to get the loan approved. This approval is for 24 months usually, and can be extended a little further out. But here is what I want you to walk away with today. Make sure I know this presentation is going to be circulated to everyone afterwards. Take a note of that web address, because there you will find a listing of all the PERS approved projects in the market. It's by state, and so for Florida, it's all listed there at that website. This is what it looks like. It's updated every Monday, and you can go there and see the project name, the phasing, whether it's a conditional approval or full approval, and when it expires. And we have a growing list there, so this is one of the resources that we hope you will make use of. Then outside of that, the lender can also do a full review, and again, this is for established condos and for 2 to 4 projects, 2 to 4 unit project. The limited review, of course, is for projects where the lender does not do a full review, and here we restrict the loan to value. So here's another slide I want you to pay close attention to. So for attached units in new and newly converted condo projects, if the PERS review is done, for principal residence, the maximum loan to value is 95%. If a manual underwriting is done. If the DU is done, it's 97%. If it's a second home, the maximum loan to value is 90%, and for investors, it's 85%. If it is an attached unit in established condos, the lender can either use a PERS review or a full review. In any case, they need a full set of documentation for that. And again, for principal residence, the maximum loan to value is 95%. For manual underwriting, 97% for DU. Second homes, 90%. Investor, 85%. For limited review, it's limited review, so there's more risk to the lender. So here, for principal residence, it's 75%, combined loan to value, 90%. For investors, it's not eligible. Here's another resource that we have made available that you as realtors can go to our website, and it is a condo buyer's guide. And I thought I had to put this. Could you just, I just wanted to show you, right, the next one. Thank you. So this is what it looks like. You go to our website and you can pull it down, and it's a very succinct but very thorough document which helps you to, when you interface with your borrower, all the steps that a buyer needs to make sure that they're a successful condo buyer. It's free, it's a free resource, it's available at our marketing center. You can go there. If you've never been to our marketing center, you can download it, you can customize it with your logo, and you can give these to your buyers as you try to sell your condo projects. We also have a project standards resource list that's available there. Most importantly, the first one is our mailbox. So if you as a realtor or lender, if you have a question regarding condos, you can always send that question to our project standards mailbox, and they usually try to respond to you within 24 hours. We also have a web page for our Home Ready Mortgage. But I couldn't leave here today without sharing with you some exciting news. So first of all, effective the weekend of July 29th, we have expanded our guidelines, underwriting guidelines for all our Fannie Mae loans. First of all, for case files which are submitted through DU, we have increased the debt-to-income ratio up to 50% from 45%. Thank you very much. We're very excited about that too. And this will definitely help you to be able to expand the number of buyers you're able to get loans for. Other changes we're making is we have also changed the guidelines. So for adjustable rate mortgages, it's now aligned with fixed rate. So you can get an adjustable rate mortgage up to 95%. And in South Florida, where I know we have a lot of self-employed borrowers, we are requiring less tax documentation required for DU underwriting for many self-employed borrowers. And all of this has been in response to feedback that we have had from our realtor and lender partners. So if you're a self-employed borrower, you can have 1 year tax return. We used to have 5 years as the period of time you have to be in that line of business. It can be reduced. We have provided guidelines to our lenders to speak to your lender as to how you may make use of this opportunity. The other exciting announcement we made earlier this year regards student loan debt. So who inside here have student loan debt? It's something that has really kept back a lot of millennials from entering into the home buying process. So they can do cash out refinance for those who are homeowners. Debt paid by others is not necessarily including the debt to income ratio with appropriate documentation. And we have most importantly changed the calculation so the amount of student loan debt which is including your debt to income ratio is that which is on your credit report. Previously, the lender had to calculate with the rate of 1% or what was on the credit report. So this is also helping a lot of millennials to reduce their debt burden that we include in the debt to income ratio. So that's it. Thank you so much.